With the S&P 500 sitting near all-time high, it's extremely hard to find undervalued opportunities in the market. Everything is pretty much rallying. Chinese stocks are rallying. Every single stock is pretty much going up. All the market crash videos have disappeared from the last few months. I mean, we talked about them. A lot of the recession stuff, everything has been going well, and stocks have been going up. It's been very hard to find good opportunities. But I do have a amazing opportunity in my opinion in this market. I believe it's the best buying opportunity in the market in general, especially for me, as I like to buy stuff that most people hate, most people don't really want them. This is what I pretty much specialize in. This is what excites me the most. That's what I like to buy, that stuff. I always tell you guys, the best time to buy is when it's not easy to buy, when most people are skipping stocks, when they forgot about a certain thesis because they're distracted about Nvidia, about something else that's fancy. This is the best buying opportunity on those hated stocks. And I do have those hated stocks, and I'm going to share them with you here in the video. But there was some pretty good opportunity in this whole sector that I'm extremely bullish on, and this is energy. And I highlighted this point on August 3rd, and I said investors forgot about AI, data centers, clean energy transition, because we're going into a recession. I mean, that really shows you how the market isn't efficient. And I don't know how people claim that it's efficient. It's all based on emotions, and there's always something that's distracting people, and it distracts them from focusing on the opportunity. And that's why I tried to highlight Constellation Energy. Since then, the stock's up 30% in 1 month on the Microsoft deal. I did buy the stock and I bought more, and now it's 7% of my portfolio. I'm up over 60% since August 5th by buying something that most people didn't want to buy. And it wasn't easy to buy on August 5th, but that was the best time to be buying these stocks. And that's what I have for you today. And those stocks are not easy to buy at all. And this is the oil stocks, because you look at them, they've been going down. There's all kinds of reasons why you shouldn't be buying them. We're going to have a recession. So a certain president might not be a pro-oil person or a pro-fracking person. Maybe OPEC's going to increase supply. Maybe it's peak oil. Maybe there's just so many reasons why you should not be buying oil stocks. And from my experience, this is the best time to be buying the oil stocks. And that's what I'm personally doing. Even though I'm not an oil expert, but I did a lot of research, and I'm going to share the research with you. If I'm right, I'm going to make a lot of money in these oil stocks. If not, then I'm going to lose a little bit, or maybe collect a decent dividend on the way. And that's how it is. It's not always going to work out. But if you want a free tip, I should say, on the best kind of stocks to be buying, is if you go on any screener and you just look at stocks trading at 52-week lows. And there's so many energy stocks. You go on 52-week lows, so many energy stocks. You could see energy, energy. It's all like almost 2 pages out of 5 at 52-week lows of profitable companies. They're energy stocks. And in my experience, whenever that happens, they don't stay there for too long, and investors are hating on them, which gets me very excited. And the first reason why investors aren't buying the oil stocks, which are, some of them are good company, like Occidental that Buffett owns, it's down 20% over the last 6 months. Buffett bought it at 55, 56, 54. This was his buy price. I shared them in another one, and now it's trading at $50. Now, no one wants to follow Buffett anymore, and it's pretty interesting. But the first reason why investors aren't buying the oil stocks, or they're fearful of buying them, is because we could have a recession in the United States. Why? Because the yield curve has turned positive and all hell is gonna break loose. Nothing has happened so far, and I did talk about this. But that's what people believe. And there's a lot of things that could contradict the fact that we could have a recession. The first one is the Fed easing faster than expected. We expected 25 basis points. They eased by 50 basis points. And someone like Neil Kashkari, which was a pretty, hawkish person, I would say, over the last year, he's saying that we could cut 50 basis points again over the next meeting, and some Congress people were demanding the Fed to cut 75 basis points. And if you have a Republican president, he wants lower interest rates, and it's gonna be a lot of political pressure, many different things. So I'm just not seeing how the Fed has a lot of tools for us to avoid a recession. The first one is lowering interest rates, which is gonna stimulate economic activity. The second one is the balance sheet. They keep lowering the balance sheet, which is very good, and they lowered the balance sheet by a lot. But this this is another tool that the Fed now has for them to be able to stimulate the economy again if they ever needed to. And if you look at the balance sheet, it does go back down, but it never goes back to the previous level. So I know a lot of people are saying, yeah, look what it was in 2018. It should go back over there. I mean, if you look at history, it pretty much never does. It makes a higher high, and then something happens and it just skyrockets again. So the Fed has a lot of tools for them to stimulate the economy. And despite us having 5.5% or now 5% interest rate, so in terms of the US recession, I think the fears are overblown. Now, you're not only having an easing in the United States, an easing in Canada, but you're also having an easing in China. And this easing is going to be pretty massive. And they're unveiling the most aggressive stimulus since the pandemic, but this is not enough. They're considering injecting up to $140 billion of capital, which I believe is around 1 trillion yuan, into the biggest state banks, the first time since the global financial crisis of 2008. And you have a lot of stocks that are related to China, like L'Oreal, LVMH, even stocks like Wynn Resorts. Any stock that has anything to do with China is skyrocketing on the stimulus news, on news that consumer confidence could rise again, economic activity could potentially get better, and these companies' earnings could flourish as a result of the stimulus that China is trying to pump in. And everything that has to do with demand, more demand is going up in everything except oil. Oil keeps going down. It's sitting at $67 per share. And to me, the way I look at it, it's pretty interesting, and it's presenting an opportunity. And it's not the only reason why crude oil is going down in terms of recession. There's another reason. And the second reason is mainly because of some expected hikes in production. And Saudi Arabia wanted to hike production, and they delayed it by up to 2 additional months in an effort to shore up prices. And this hasn't happened yet. And we might not have the production hikes that we're expecting. We might, but we might not have them. But at $67 per barrel, I believe a lot of that stuff is priced in. Another reason why the whole thing is happening with crude oil's down move is because they're abolishing the $100 per barrel price target, which, based on my research, it wasn't even an official target. And they confirmed that it's not an official target, and there's no price target from OPEC. They act based on supply and demand, not at a specific price target. And if they do, they're not going to tell us. That's the honest truth, guys. But this $100 per barrel stuff came in because the IMF placed Saudi Arabia's fiscal break-even. This is not just cost per barrel break-even. Their cost per barrel break-even, I think, is between 35 and 40. But the fiscal break-even oil price is $96.20. So they came up with the $100 target, and now oil is going down because there's no official target. And if there was, they're not going to tell us. I mean, this is the truth, guys. But if you think about it, if the fiscal break-even for Saudi Arabia is 96.20. I don't know what it is for the United States because we're not so dependent on oil exports and oil production. But for the United States, break even in terms of average price break even for the companies to stay profitable, it depends on the wells based on my research. So the new wells, they have a higher break even price between 60 to 70, the existing wells between 35 to 45. So in total, if we assume 45 in the United States, and Saudi Arabia has $96 break-even price, and likely their cost per barrel is 35 to 40, I would expect prices in general to remain above $45 per barrel, and they're gonna likely do whatever it takes, even if we have a different president, even if we have a, maybe Donald Trump or Kamala Harris. I just don't think they're gonna let the oil companies lose money. And in the United States, it's around 45. OPEC has, lower cost per barrel, but their fiscal cost per barrel is much, much higher. So it's likely going to be around 45.50 in my personal opinion, 45.50, and now it's sitting around 67. So it's approaching the $45 to $50 range. And it's getting pretty close. So we're nearing the end of this whole thing. And oil will likely stabilize if it's not bottoming out right now and going much, much higher. Again, I'm not an oil expert, and I might lose my shirt on all this research, but I've done it, sometimes before, and sometimes I made money, sometimes I lost money. But that's the way I'm thinking about it in terms of a common sense perspective, I don't think they're gonna let oil go below 50. I don't think they're gonna let their oil companies become unprofitable. So if the bottom is 50 to, let's say, $55 per barrel, we're close to $67 per barrel. I would say we're nearing a bottom and we could bounce much sooner than a lot of people expect. And these oil companies, a lot of the oil stocks are attractive. A lot of you like, the from Brazil, I believe it's PBR, the Brazilian producer. Although you have political risk, but the free cash flow yield is huge. A lot of you like other stocks. For me, my favorite ones, which I've done videos on, you could look at them, I'd check them out. The first one is MPC, Marathon Petroleum. The free cash flow yield is now 11.6%. It's actually a little bit higher. They have the midstream business, which is going to add some stability to it. The second one is Buffett stock, which is Occidental. The free cash flow yield is around 10.6%, and it's more of a leveraged bet on crude. So it's much riskier than MPC. But if you believe that crude is bottoming out, or if you, for example, for me personally, I don't own Occidental yet. I own a few other oil stocks. But if I would buy Occidental, if oil would go to like 50, 55, and if I believe the bottom is 45 to 50, I would be buying Occidental because Occidental is more of a leveraged bet on crude oil. And I explained it in my video. But the way I look at it, again, as a last view, no matter who really wins, some of them have higher tariffs, some of them want higher corporate taxes, is eventually going to level out. But for me, I just don't think they're going to let oil go below $45 to $50 per barrel, maybe for campaign donations, maybe for common sense purposes, for many different things. And you could look at it from this chart. This is like the inflation adjusted crude oil, which now is around $71. I'm not sure if this is the latest figure, but you could look at it on a historical chart. It's pretty much nearing a bottom in terms of an inflation adjusted price. In terms of on this chart, I mean, it's a very good chart in my opinion. And you can look at another one, which is crack spreads. And this is what stocks like MPC and PSX trade on. And the crack spreads are like nearing lower than historical levels. And this is not inflation adjusted. So inflation adjusted crude oil price is amazing. And it's nearing a historical bottom. So the way I'm looking at it, I think the fear is massively overblown in crude oil in terms of sentiment. Higher supply, $100 price, we're going to have the election. I think mostly near the elections, maybe a little bit before, things are going to clear up a little bit better, and we're going to start going up from there. That's what I personally think, and I've been taking advantage from this opportunity, and I'm taking my time because no one knows when crude oil is gonna bottom. But if I had to guess, I would guess it's not gonna go much below 50, 55. And if it gets there, I would look for leveraged bet on crude oil like Occidental Petroleum. If I wanna be a little bit more safe, I would be looking at stocks that have midstream exposure, recurring revenue, like PSX, like MPC, and many different stocks in this space. And this is my opinion on those stocks. It's maybe not your favorite. I'm not talking about Visa or tech stocks, but I'm just highlighting what I believe is the best opportunity in the market, and I'm taking advantage of it. And this was just my opinion, not financial advice. Thank you for watching it. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.